Welcome back to another episode of my trading vlog, where 80% of my views come from returning subscribers. If that's you, hit the thumbs up. If it's not, consider subscribing. The forecasting is on point. I want to start with the meme stocks today, GameStop and AMC. We had a lot of really good hype come out. The earnings were positive hype. It's not hype, it actually is a really good thing. The company still might be overvalued. Regardless, looking at the technicals, I think we could still get a push up to 32.56. It's possible. At this point though, the breakout from this flag after the earnings seems to be kind of lethargic, not getting above that $24 level. We need to get a daily close above that $24 level to really confirm the double bottom, and then those targets above will be more valid. Right now, just grinding sideways with the markets. It's painful. AMC is doing the same thing. I've got a massive double zigzag here. This downtrend has broken, and that doesn't necessarily mean we're gonna get like a big uptrend. It could just mean that the price is getting ready for the next downtrend. That would be completing a massive fractaling measured move down, which I have followed extensively in the past. At this point, I just want to say that I have not been trading AMC. I have been thinking about it, but I do not do it. No, I resist. You can see that I had a motive wave count through here in yellow at the sub-minuet degree, and we reached the target at 433, 161.8% extension there from that wave one. So you get this little dip and this pull up, and if you know what you're looking for right away, you can put these kind of targets down and you could catch that, 30-cent ride down. See, it's just like not a lot. It's just not a lot. It's not looking very meme-tastic right now. It's really not. These kinds of rectangles are the worst. They're so grindy. If you're trading options through here, you're not making money, especially if it's right over a strike, 450. So yeah, you don't quite get up to 5, you don't quite get down to 4. If you're trading the 450 strike, you don't quite get, all of your gamma or your delta because you're not moving a whole dollar. So it's brutal. It's just brutal. Insane. While we're here looking at meme stocks, let's go to BBBY. Not surprised to see ourselves down below 78 cents here. I called the peak here on this one like really well. That was quite a while ago, like a long time ago, more than is on this chart. But yeah, the meme stocks are just having a bad time. GameStop, I think, is going to be a more normal stock moving to the future because they've actually reported positive earnings. So I think with time, you'll start to see short sellers unwind their positions, and we'll see what the company is actually worth in the future. Let's take a peek at Playboy before we get into the QQQ SPY kind of a deal. Playboy had a spill today, which should not be that surprising because we had like a 16% rally after that big dump from earnings. This might be called a poop and scoop. Someone shared that in the Discord. I was just chuckling. Really, to me, it starts to look like we're finding an inverted head and shoulder pattern through here, where maybe this is the left shoulder and this is the right shoulder. If that is the case, the distance between the right shoulder and the head is greater than the distance between the left shoulder and the head, and that doesn't bode well for the pattern in general. But I'm still pretty bullish here. After this big dive, looking for a 3-wave push higher, and this could just be a reverse triangle that's occurring through here with some outlier prices. I'm sure if I go into a higher time frame, that spike probably disappears a little bit. Not really. Nonetheless, I'm thinking to myself, this is looking good. We might be able to get a bullish rally through here. And if not, that's totally fine. And you're going to notice I'm not going to take that high here for this first point. I'm going to come down here because this is where that first impulse ends. And then I'm going to go to the low here and looking for that 225 level off that 100% extension. If we get a full move, a full extension, we're going 245. So I'm pretty optimistic here. I really am. Today I sold some Playboy shares to buy a put on SPY, which I made money on. I decided that anything over 200 shares, I'm going to be trading. After that 16% rally, I knew I should have taken some money off the table and I could have bought back in lower again. So I'm definitely going to be trading now, Playboy. Not just buying and holding, but trading it. But always making sure I have at least a couple hundred shares because honestly, I have a lot of faith in this company. Moving into SPY now, it was another just grindy day. I've been floating the idea that we've been in some sort of triangle, and the size of that triangle just changes all the time. Like, I can put a triangle on a 6-month time frame, or I can put the triangle on, this weekly time, multi-week time frame. And during the day, triangles all the time. And it's just like the worst. You can see how the price is overlapping a ton through here. And this is painful to trade. It really, really is. You got to get in, get out, take your money and say thank you. because you cannot be holding onto those 0-day options. As soon as you think you know what's going on, SPY turns the other way, and today was no exception for me. I thought we were going to find ourselves breaking out of this pattern here, heading lower, and sure enough, the price headed higher and formed an extension of this corrective wave, which could still head lower. So this isn't really going to be an uptrend. Just ignore that this is green. But I think that this was a corrective extension, and we're still looking for more downside. That might be the first half of this move down to 393. Otherwise, on a more bullish note, we're going to be expecting the price to push out and test this 404 level, try to regain this upper trend line. But again, this doesn't look very motive to me, not yet. You can easily see that there might be an impulse here, and this could be a half staff formation, in which case SPY rallies and pushes much higher. In which case, this motive wave 1 would be valid, and I'd be coming down here and saying this test of the uptrend is wave 2, and we'd be building into wave 3. So there is of course the potentiality for a bullish reversal through here, but personally, I don't think that's what we're going to be seeing anytime soon. Now let's go to QQQ. This is really what I want to talk about today. I have this really confusing analysis, and I shared it in a post, and I tagged Trader Henry. You know, he's a pretty cool guy. I think he's got the right analysis. He uses Bulkowski chart patterns. Yeah, if you're using Bulkowski chart patterns, you're going to be right 65% of the time. That's what the statistical probability is, and that's better than 50-50. It's better than guessing. That's called informed opinion. So, you know, if you're using Bulkowski chart patterns, you get a pass by me. When I look at QQQ, I'm thinking double top, and the reason for that really comes because of this low right here on this uptrend on March 13th. What this did is it broke the low set on March 2nd. And why is that significant? Because March 2nd completed a three-wave form after an impulse wave higher. You can see I have points A, B, and C labeled here. After this three-wave impulse ends, this three-wave correction ends, what we're looking for is a new impulse heading higher. That initial actionary wave will not be completely retraced by the subsequent wave. So wave A and wave B should not pass below the start of wave A, but it totally does. And what that does is it means we're now in an extended correction, which is no longer a bullish push higher, but a corrective push higher. That means 3 waves, not 5. And when I analyze this rally, I easily see an A, B, C formation that peaks at the prior high and looks really weak in the last half. And let's zoom in here on the 15-minute time frame, and I'll tell you exactly what I'm looking for. So this is impulse A, corrective B, and then this impulse wave, it looks to me like it's an ascending broadening formation, which would be a reverse triangle. And what I really want to note here is that between each opposing touch point in the pattern, it appears that the price is making a 3-wave motion as opposed to a 5-wave motion. That is to say, the price is traveling across the pattern in a way that conforms to corrective wave rules, not motive wave rules. In other words, this thing looks like it's ready to come down. The trend is up, but the waveform is saying, no thank you, we've had enough, we're done. And I think that's what's happening here in wave C. And it's very possible that we got the breakout today. And I'm going to zoom in a little closer. You're going to see that there was this push lower, price came up, touched that trend line, and it's now heading down. If we can get below 308, that's going to confirm a breakout from this pattern. And on the Bulkowski chart pattern analysis side of things, we're going to be targeting 302. Well, what that does is it also confirms that would confirm a double top through here. Let me go to the hourly. Oh, I guess it doesn't quite confirm a double top. Not yet. That's on a bigger time frame at 287. So looking for 302, and then the next target would be at 287. If we get through there, then we have a true double top, and it just looks like that's what's setting up for me. I tried to simplify the Elliott wave analysis by just drawing these straight lines. It looks kind of cool. I did the same thing in Apple a while ago. In fact, let's go over and talk about Apple and Tesla really quickly. Yeah, right here. I think this looks really cool. Let me go into the daily. Yeah. Looks like lightning. It's cool. I like it. Anyway, let's zoom in a little bit here on the hourly time frame. There was this massive impulse higher, big dip down, and we had this right angle broadening formation and a partial decline, which played out very nicely. This is what I was expecting. It really did. The bearish reversal confirmation level at 148 offered support. these lines in the sand I draw, I'm really liking them. At any rate, you can see the price did push higher from there. We might actually have 1, 2, 3. This might be 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, or 5 of 3. Maybe this is all the way 4. Maybe it's 1, 1, 2, 3, 4, 5. What I'm trying to express here is that this impulse heading higher could be complete. We might actually have our full wave 5 at the, what wave degree am I even working on anymore? It looks like I started a new wave count in the minor degree, supposing that this would be impulse 1, this would be corrective wave 2, and we're looking to build into impulse 3, which would be huge. This would be 1 of 3, 2 of 3, 3 of 3. So 4 of 3 would come down, and it could not pass 155.73. So this is what I'm looking for, is interaction with this level, and this bullish extension confirmation level now becomes bearish reversal confirmation. That's very important. See, these are the lines in the sand right there, and you're just really looking for the correct impulse relative to the degree that you're working with. So if we go below 155.73, then on the minuet level, we are breaking that third wave extension, which would break the 1, 2 at the minor level. And that's a big deal. It really is. That makes me think that maybe minuet wave 5 should end up here, or this is all just one big corrective structure. It's very possible. I was calling for a bounce and a rally in Apple. We came up here and we started dipping, and I was like, I'm expecting a push higher. We've gotten that push higher, but it's not convincing me that we're going to see a whole lot of upside, surprisingly enough. And maybe in the more optimistic sense, we can just draw a straight ABC correction here and say if we get that full ABC move, we're looking for 175.32 or 194. These are pretty high targets, and honestly, this would make a lot of sense to me before a big crash is one more like ridiculous rally. There is bearish divergence in the RSI here. That's where we got these descending peaks, but the price is making ascending peaks. Higher highs here, lower highs here. That's called bearish divergence. And when I pull up the RSI, you're going to see a momentum indicator is also showing us a divergence there as well, swinging only ever so slightly higher than it did in its last push up. Not a lot of momentum here. That's the thing. Implied volatility. I watched the correlation with implied volatility very closely. You can see implied volatility is dropping all the way through here as the price is heading higher. Implied volatility tends to drop in correction and rise in motive modes. And so see it down here and bottoming. This tells me one of two things. Either we get a rally in the price and implied volatility rises with it, or we see the price start to turn down, and implied volatility will stay low for a while until we get below probably this last valley, and then you'll see it go up again. But it's very worthwhile to do a trend line study on a stock and watch the implied volatility and understand how that works. Another thing too we can kind of peek into is volume. It's really hard, all these spikes, right? Just a bar chart. It's hard to look at. So I run a 30-period average through here. That's the yellow line, and you can see that it's been coming down. Volume, the 30-period average has been decreasing for a while now. The price has been in correction, and maybe what I want to do is draw some sort of a pattern through here. And I'm sorry, I have so many lines on the charts. You know how I am about keeping a clean chart. Here I am just dropping lines down like I'm Ron Walker. No, that guy's worth listening to. He really is, but his charts, sometimes they annoy me. And anyway, maybe we got A, B, C. This could be D, shooting for E, but you see how the price is pushing over the top of the boundary here? And this is, again, look, that's a partial decline, right? So it's hard to look at this and say that we aren't going higher, because it does look like it's positioned bullishly. It does. But at the same time, there's like momentum indicators and RSI divergence here that is hard to reconcile with. It's very possible that we see this RSI broken. The bearish divergence, reading the RSI is hard, because bearish divergence to the RSI does not necessarily mean that the price is going to turn. Remember, the RSI follows the price, not vice versa. So when you're reading the RSI, you have to understand how the RSI works. And the RSI will look different when the price is in correction and when it's in motive mode. And this is actually a really good example back here. You can see Apple here rose to 75 very quickly in the RSI as price rallied correctively. And you're going to notice something, that yes, the RSI hit 70 a couple of times, came down, but it's one clean trend line push up. and then a dump afterwards. Typically, this is what I see in the RSI, is when you get a corrective move, the extreme of that move is marked by the RSI. When you get emotive mode, you're going to have waves 1, 3, and 5 all hit 70 typically, depending on the time frame you're looking at them on as well. But you're going to be able to see the RSI hit that level several different times. And so if that's going to be the case here where we do see a push higher, this divergence will actually break. And if we set up like a triple divergence, but that would be where the price doesn't rise enough to carry the RSI into a new high like this. Don't fear, guess what? We could still see the RSI push up one more time. And once the RSI breaks that divergence, my experience has been that once the divergence breaks, the next high in the price is a significant high and typically marks a top. So everyone's looking for a reversal. Guess what? Bearish divergence isn't a myth, but you don't know how to read the RSI. Price pushes higher, RSI breaks its divergence and sets a new high. And maybe even then the price stays super high while the price rallies. And so while you might call it bearish divergence, this could be the pattern that you're looking for if you're bullish. What? Yeah, look for a bearish pattern to break if you're a bull, and if you're a bull, wait for a bearish pattern to break. That's where the money's made. It's in the reversals. You can ride trends all day long, but if you can find the reversals, that's where the most money is to be made. And what's going to happen when the RSI is way overbought or way oversold is implied volatility is not going to stay flat. That's typically not what I see. So if you're an options trader, you know what that means. Woo! Vega. Let's go to Tesla. Haven't taken a look at Tesla in a while. This is going to be a long one. And my views are low and audience retention's low, but that's okay. I do this for me. It's really fun. For me, I just enjoy this. So I guess the more my views drop, the more I do this for me, less for you. That's why I got the AMC and GME out in the front, because I know some people are here just for that, and that's cool. There you go. But really, I'm more interested in trying to study the markets and understand them as a whole. So Tesla, I've been looking for a wave higher. I'm supposing that we may have seen waves 1, 2, 3. We're dipping down to 4, and we're looking for a sub-new wave 5 towards 205.90. But again, this could just be a counter trend where 1 here is A, 2 is B, 3 is C, and we're beginning a new motive wave down, which would make this a nasty topping pattern. You can see right away that it's got like an ascending scallop. It's called a scallop because it's got that like shell look with the ridges. Anyway, that pattern confirms as valid and breakout when price rises above 214. Until there, price can do a lot of different things. We go into a triangle, we go into a rectangle. There's a lot of uncertainty, and we're not going to get like a really good signal until we drop below 167. But if you're smart, you can identify this first impulse at 185.09 and say if we get below 185.09, then we're breaking this potential motive wave count, and we know this is ABC, in which case we'll be saying that this dump from 214 to 164 is actually the first impulse in a motive wave heading lower or in a zigzag heading lower, in which case I'm going to have to change my count, which is totally fine. That's how it goes. It's not about having like the right count is like a myth. There isn't a right count. There are many correct counts, and it's about probabilities, right? At any rate, if I do need to recount this, we may be flipping very bearish here. We're coming down to 151.03, and that's really not that bad because this was a big impulse. This was a huge impulse. So, yes, it's like indecision all over. I cannot get a solid read on hardly anything right now, which is super frustrating. Super frustrating. The dollar dipped beyond the target 102.579, so I was looking for that 161.8% extension at 101.083. We got a bounce, makes sense, and now we're coming back down today, and maybe that's what supported the rally in SPY was this push higher, but honestly, the effect has not been that generous to other equities that or other futures that typically tend to trend with or against the dollar strength. So again, there is something going on with the dollar that I don't understand, and it might have to do with dollar demand and the need to liquidate treasury assets in order to support deposits in other countries. Like, that's very possible. Another thing could be that it's related to the bond market and yields dropping. So there's something to untangle here. And until I'm able to really figure it out, I can't tell if this is 1, 2, and we're looking for 3 to surge higher, or if this is actually just going to be waves 3, 4 on the minute degree here in white, and 5 heading lower, maybe truncating. This could truncate. If we get a push lower that does not surpass that prior low at 102, then we could even say that this is a truncated fifth wave, and we're still looking for a push higher. It's starting to look like the dollar wants to go higher. I called dollar bounce from hell, called reversal, and now I'm like, ooh, we might be in for another bounce, which is really interesting. Really interesting. If the Federal Reserve continues to raise rates, then yes, dollar strength could continue to increase. Now, because dollar strength is a weighted value against other currencies, I think how fast the Federal Reserve is raising rates here versus other country has a lot to do with the strength of the dollar. So if other central banks are outpacing the Federal Reserve, then dollar strength relatively weakens because it's relatively more available, more liquid. So yeah, there's something definitely brewing here in the dollar. And again, it's like we're at one of those moments where it's like everything's in the air. And I'm not going to try to pull you one way or the other. This is a vlog. It's about me and what I think, really, right? I think that people who are trying to tell you it's going to go one way or the other right now don't know what they're talking about. There is no such thing as certainty in the market. It's all about probabilities. Right now, it doesn't make a whole lot of sense. You're going to see here on the 10-year Treasury yield, this line is kind of annoying me. This is just a flat thing through here. Just flat as get out, kind of forming a triple bottom maybe. Like where's the, like look at the waveforms through here. A, B, C. That's definitely A, B, and C. This could be 4 and 5, 1, 2, 3, 4, 5, but what kind of motive wave looks like that? If I consider that as a motive mode, I right away I have to go into descending broadening wedge, right? And start calling it reverse diagonal. Which would make sense in a corrective wave heading lower, but it's got 5 waves, right? So that implies motive mode. And coming out of there now, we have one strong push up and one strong push down. It doesn't really speak to whether or not this is a corrective or a motive mode. The dip here to 33.20, something like that. Well, we're passing this prior low. This tells me that okay, we've wiped out this entire corrective wave through here. So this was probably not an impulse of a new motive mode. It could be corrective though. We could have A, B, and C pushes higher, or we're looking at A, and then B is a 3-wave form, and we're just starting C, which would be a 5-wave form. And if that's true, well, guess what? I'm going to do my extension tool again. I'm just going to say, okay, we've had 1 of 2, 1 of 5, 2 of 5, and 3 of 5 might come down to 29 or 25. That'd be 2.5%. And that would mean yields would be dropping. So if yields are dropping, that means premiums are increasing, which means that the bonds are being bought, which is actually what I think we're starting to see, isn't it? Flight to safety. While we're talking about flight to safety, let's go ahead and have a look at gold futures. I'm kind of watching a double top through here. Now you got to be careful because it's really easy to point to these peaks, and my arrows are upside down, and say these are peaks double top. But that pattern doesn't confirm until the price falls below this intermediate valley at 1934. The trick is going to be to know whether or not this is an ABC correction or whether or not we're looking at waves 4 and 5 up here. Waves 3 being the first peak, 4 being the valley, 5 being the next peak. If it is an A, B, C correction, the target's 1932. Look at how close that is to that target, right? So at any point, we could see this thing reverse and turn higher, which I think it may if we're talking about flight to safety. And you're going to remember what I was saying about the RSI. In correction, the RSI tends to hit the oversold or overbought and then just move away, right? And that's what it did here. You can see that we had a strong motive wave heading higher. Look at what the RSI does back here when you're in motive mode. And you know what? We're going to zoom in on this because there's a lot of people talking about bearish divergence right now. And I just want to go over this really clearly because this has burned me so many times. I had to learn this the hard way. And it's like, learn from my mistakes, please. So here's a beautiful example of like bearish divergence where you have these descending valleys in the RSI. And then right here, actually, you have this higher high in the price. And there's even a couple more peaks. And again, my arrows are upside down. here and here, right? It's all kind of at the same level. The point is that the price is not falling with the RSI. And you're thinking to yourself, oh, this thing's going to give up. Look at this. This is looking really weak up here. We're not having any volume. We're not pushing higher. RSI is doing this thing. And you'd open the MACD and you'd be like, wow, look at this. We got a bearish cross right here. And then guess what? This thing takes off. That's what I'm talking about. You've got to know when to read those patterns. Just because it's there doesn't mean it's going to play out in the way that you're expecting it to. It's just an expression of the price averages. That's all it is. It's not a magical thing. And you have to understand, if the averages are going to swing wildly one way, then guess what? Your RSI all of a sudden is going to get like locked and overbought. You can see this. Check it out. It's just oscillating. Remember, the RSI is an oscillator. So when averages overall are trending much, much higher, you're going to get the up and down oscillations in a higher range in the RSI. And that's the right way to read the RSI. When I think of the RSI, do you know what I see? I see a cylinder. I see a cylinder that spins. It's a line on a chart. I know it's hard to conceptualize, and I'm sorry, but that's just how I see it. At any rate, so yeah, and then you see gold rally. So when I zoom in now, right, and it's kind of the opposite story, what I don't see here is I don't see the RSI doing that same behavior at these dips. Now back here, yeah, that was pretty brutal. But over here, it looks like we seem to be just bouncing between the two levels, 70 and 30, back and forth, which tells me that this is a correction. And if this is corrective, this is going to be wave 1. And remember what I was saying back here about the RSI moving in motive mode? Yeah. So waves 1. And maybe this is 2 of 1. This is 3 of 1, 4 of 1, 5 of 1. Possible. Also possible that this is all wave 1 and this is wave 2 and we're looking for wave 3 to pop higher. If that's true, and this is actually my preferred interpretation of the chart, is that this is the correct or the most likely outcome, which is that we're going to see gold blast past 2000 very shortly, having come to the end of our corrective pattern, probably after one more dip, probably after we hit 1939 one more time. And I said that just because it looks like we might not quite have 1, 2, 3, 4, 5 waves. We might have the first 4 or 5 waves in this last leg. So maybe a little dip, a little bear trap, and then bam, just watch this thing fly. So I'm really excited. Of course, if we get the full extension, the full move, we're looking at $2,200 for an ounce of gold. I love it. Let's go to SLV. SLV is an equity. It's not really silver. But this is where I have a lot of analysis, and I called this bullish, this rising diagonal bullish, and I'm still bullish, I'm thinking though that we found ourselves in a correction. You can see I have this zigzag labeled here, and that's, I don't know from when that's from. In fact, it looks like I might have used the 15-minute time frame to draw that. So coming down to 2104, double bottoming, find support, pushing higher now just a little bit. This looks good to me. This to me says yes, we've had our leading diagonal triangle, not a rising wedge, but the opposite of a rising wedge in terms of forecasting. And this has just been a nice ABC move. If we get above the valley at the trend break right there at 2120, guess what? We've invalidated a motive wave count heading lower, which would be 1, 2, 3. This would be all wave 4, and wave 5 would push us down lower. And if that were the case, we'd be looking for that 2082 level, a counter trend, and then boom, blasting through there for that confirmation. And that's not what we're seeing. Instead, what we're seeing is we're seeing the target hit nicely at 100%. Waves A and C are not always, but supposed to be, they tend to be about the same height. So that this is being wave 1. And now wave 2, you know, it looks good. And the price rising above that 2120 level, breaking that bearish motive count. So this to me looks like a bottom. And this is the best part. This is the best part. I actually bought a call today, a $1 call. I'm buying $1 calls in SLV because one of these days, this thing is going to explode and it's just going to fly. So what I did there is I took the extension tool. I went from, I could have taken it from back here, but I think this is actually the beginning of the new impulse. I took that point and I attached it to that high, took it to low through here, and boom, what do you get? 2208, not bad, extending to 2273. So, and I think that move would be pretty swift too. It'd be very nice because we'd be actually moving into a third wave extension, and that would have its own trend, and it would be steeper than the trend that was set before it. and we'd be calling that the third wave channel, the temporary channel. And I'm waiting for that. I think that's really what we're going to see. So I think I've gone over like a ton of stuff. I don't think I left anything out. Let's talk about VIX. Everyone talks about VIX. I'll talk about VIX. I don't know what chart this is. I didn't mean to type this in, but I'm intrigued. Okay, let's go to VIX. Okay, so yeah, this is looking like VIX wants to drop, right? Which would imply SPY goes higher. It's really weird to get 3 peaks through here. I don't know how to read that. Of course, we want to put a triangle through there. Price would have broken out, pulled back up into the pattern, and now is heading down again. It seems like we're finding support near this 21 level. SPY is doing weird stuff, you guys. Look at the implied volatility, okay? It's non-comparable to the prior implied volatility behavior. What happened? That's a little disconcerting to see implied volatility in VIX do this. This tells me that the market's not like necessarily super fearful, but ready to run, like ready to get super scared. Look at the MACD. It's like way bearish, and maybe on this is up because we're looking at a 15-minute time frame. Let's go out a little bit. Let's go to the daily. And it kind of looks a little more simple here. We might have waves 1, A, B, and C for 2. This could be 3, 4, 5 ending here. So a bounce in VIX. And who knows if it's corrective or if it takes off, you know, into a new motive mode. But you're seeing the bearish cross and the MACD here. Implied volatility, though. What's implied volatility doing through here? Implied volatility is dropping, which tells me that this move down, this is corrective. Okay, so if I can make that assumption that that's actually corrective, I'm going to go into the hourly time frame, and I'm going to start trying to find a way to justify that push down in a 5-way form. Or is it a 5-way form? That's the question. On the daily, it was pretty easy to establish that, but when I look at it here, it's a lot harder, right? Maybe, shoot, this is going to be hard. This could be 1, 2, 1, 2, 3, 4, 5. 4, 1, 2, 3, 4, 5. So I think that this is actually the peak right here. And what I'm looking for then is a zigzag from this high to that valley to this high. Boom, 100% target at 21.24. And is that where the price is bottoming? Yes, that is exactly where the price is bottoming. Okay, there you go. So 1, 2, and then yeah, VIX could fly. VIX could fly. So this has been a super long, extended daily market update. I hope you've enjoyed, and I really appreciate everyone who is following and watched to the end of the videos. T-Man, I know that's you, dude. You guys are great. Thanks for hanging out in the Discord, Duke. Obi-Wan's going to be busy this week, so I'm going to try to keep up with it, but guess what? I'm also busy, so I'll do my best to be active in the Discord when I can. I don't want to leave you guys hanging. I really, really don't. I'm really starting to feel like I'm getting somewhere in terms of my trading. And so I just want to keep everyone in the loop and try to share the love, you know? Also, just like flirting with that idea a little bit. Okay, I'm out of here.